Hello and welcome. My name is Martin Jones and this is the London School of Business and Finance, as you can see from the branding over my shoulder. Well, you've probably guessed there's nothing actually over my shoulder, there's just a green screen here. But the green screen is telling you that this is the London School of Business and Finance TV. And my t-shirt is telling you what I'm presenting to you over the next 1 hour. I love AAT, so I am presenting on AAT. And this hour is the mid-level hour, it's the level 3 hour. So I am doing the advanced bookkeeping, the financial reporting introduction paper, the 2 level 3 papers. Enough said by me. I'm going to go mini-me and show you what I'm doing. Just right there. Oh, just let me do something. There's something funky going on with the mouse there. Okay, now cool. As you can see, there's the title. There is confirmation of the 4-letter acronym AVBK, which stands for Advanced Bookkeeping. And generally speaking, actually, to be frank with you, the advanced bookkeeping is easier than the stuff I was doing in the basic bookkeeping in the studio just next door. But this particular task taken from the 2016 examination that you can see just hovering just on the edge of the screen here is actually pretty tricky. I'm not really looking forward to telling you about this, but I suppose that's the point really, isn't it? I'll be able to, show you that if you're finding it's difficult, it's no wonder you're finding it's difficult, because it is awkward. And it comes back to this phrase that I was using last week. I was using the studio just next door, and that is bookkeeping is a language, and people use it in different ways. And sometimes, sometimes phrases can be ambiguous, and I really feel that this exercise is deeply ambiguous. But see what you think. Oh, that's not what I meant to do. What I meant to do was this, and show you the other stuff I'm going to do. So there's the first task number A, or letter A. And then I've got some proper accounting, you might call it, proper bookkeeping. And I'm going to have a little play around with an advanced payment. Can you see the vehicle running expenses? The vehicle running expenses includes some insurance, is it? Can I remind myself? Includes, oh, here we go. Road licenses, that's right. It includes a couple of road licenses payments. There's a number of vehicles, you see, not just one. And one of them was partly paid in advance and one of them was wholly paid in advance. And because the T account is recording the cash transactions, some of this year's expenses are in this year's P&L at the moment, and we need to throw them forward into next year's P&L. It's a concept called accruals. It's quite cool actually, it's alright, that bit's quite nice, I quite like that bit. And there's I'm going to slot in the answer to that just there. And then what do I do here? I do a little bit of T accounting for you, which is also quite cool. Have I missed anything? No, I do a little bit of T accounting for you there, which is also quite cool. So the end of this exercise, quite nice, quite nice. As just mentioned, this exercise has been taken from a past examination paper, the 2016 paper. It's now sitting on the AAT website as a specimen paper and is highly indicative of what you'd expect in 2018. So what you see here, and especially the language that you see here, you can expect replicated in your 2018 and indeed your 2019 examinations. Let's have a look. So here we go. Enter the figures given in the table below in the appropriate trial balance columns. Do not enter zeros in the unused columns. Do not enter any figures as negatives. So no negative debits. If you mean credit, say credit. And as you can see, there's an element of T account going on here. Not sure we really need to reinforce this particularly in this case, because you can see the debit and the credit at the top there, but let's go for it anyway. Just going to change the pressure sensitivity of this pen. I find it difficult to write with a pressure sensitive pen. Where's that going to be? Pen and touch. Pressure sensitive, there we go. Paul was in the studio just a moment ago and he likes pressure sensitive pens. I find it awkward to write with. I don't press very hard basically, that's why. So the accrued expenses So the accrued expenses are, I think what I'll do is I'll just, how shall I do this? The accrued expenses are the costs that we have incurred from suppliers that we haven't paid yet. And the classic, I'm not sure how realistic this is, to be honest with you, but the classic example that's often given for this is, no, let's go for this. This could happen, definitely. So what's happened is we have taken supply of electricity. We have taken supply of electricity, but we haven't paid for it yet. So we've taken supply of the electricity, but we haven't paid for it yet. They have supplied and we haven't paid. They're a supplier that we haven't paid, they are payable. If they are payable, then they're a creditor, so we'll be bringing down a credit balance. Don't like this red, so let's go for a blue. Carriage inwards. Oh gosh, that's really old-fashioned language, but it just means a delivery cost that we are paying for, where we are paying for the supplier to supply to us, which would be unusual, wouldn't it? But it might actually be that it's coming from one warehouse site to our factory site, and the two are separated. And the inwards is coming in to the factory, and actually it's just going out of the warehouse. So it's just really a transfer cost from one place to another. So that would be an example of a cost in that context. And costs are debit balances. So that would pop up here. 2240. Carriage inwards is an expense. But just to make it clear, you do get delivery costs where you have to pay because you go to their site and you then drive, you buy the goods at their site and not only pay for the goods but pay for the driver to drive to the site and pick it up, and that would be quite common in the building industry. So don't get me wrong, you do get this kind of carriage inwards expense being the classic one that you're imagining, which is you drive up to your supplier, you take the bricks out of their warehouse, you load them onto your, what's that called? Flat bed lorry. Gosh, I got there in the end. You load the bricks onto your flat bed lorry, and the expense of having 6 men to load the bricks and the big van and the petrol and everything else, that's come to 2240, and you've had to pay for that because you've driven up to their warehouse and you've taken the bricks from there. So carriage inwards is the expense. Discounts allowed is one of the harder ones because you've got to think what that means before you can get anywhere at all. So discounts allowed is you saying to your receivables, you don't have to pay me. Yeah. So you're saying to your receivables, discounts allowed. It depends on which side, doesn't it? Yes, of course, right, okay. Yeah. What you are doing is you are saying to your customers that you don't have to pay me. So that is really, really tricky. Gosh, they are so tricky, these things. Oh my word. How many marks was this? Just 2 marks for this hard work, and we're going to sweat out for these 2 marks and then going to relax into the double entry that happens down here, which is far more marks. So that's good. So just saying it again, this is hard. But discounts allowed. The discounts allowed is you are allowing your receivable not to pay you. If you are allowing your receivable not to pay you, what it does to the receivables is it makes the receivables go down. But if it makes the receivables go down, that's an expense to your P&L, and that expense needs to be a debit balance. It costs money to say, no, don't pay me, it's all right. And then prepaid income, surely this one's not going to be a sweat. So with the prepaid income, oh yeah, that's okay. So we have paid our suppliers in advance for their services, and therefore they. Oh, if I said that the right way around, no, my apologies. Prepaid income, not prepayment. Oh my word! Even this one's not easy. Let me try again. It is. I got the right kind of idea, but I put myself in the wrong position in the relationship. A prepayment is a prepayment, but there's two different ways of having a prepayment. What can happen is you can prepay or you can be prepaid. And what I got mixed up about is, of course, this is not a prepayment that we're prepaying them, but they've prepaid us. Can you see the word income? So it might well be that we don't really trust one of our customers, and we say to the customer, look, you know, I'm going to do some work for you, it's cool, but you have to pay me in advance because I've never met you before. And once you've given me a balance, then I'll go and spend some money and I'll start doing the job. But I'm not going to start doing the job until, if I said this the right way around, prepaid income. Yes, I'm not going to start doing the job until you have given me the cash. Then they give you the cash. And what you owe them is not cash, but you owe them supply. 975, therefore they're a creditor. Oh my word, I'll be so glad to move on to the next bit. I can see the time's looking okay, so hopefully I'll be able to come back and sell you those balances again, but that is not easy. The thing is, it's to do with the language. It depends on how you interpret the language, and little twists in the detail of the way that the expressions are used makes all the difference as to which side of the trial balance these balances are appearing. It's really tricky, that. So if you found that tricky, it's because it is tricky. Whereas I don't think this is so much. You are working on the accounting records of a business for the year ended now. In this tax, you can involve VAT, which is great. I hate dealing with VAT in these questions. It really adds a layer of complexity we don't need. Business policy, accounting for accruals and prepayments. An entry is made into the income or expense account and an opposite entry into the relevant asset or liability account in the following period. This entry is reversed. So we account for accruals and prepayments in the usual way. You are looking at vehicle running expenses for the year. The cash book for the year shows prepayments for vehicle running expenses of 9,468. This includes the following payments for road fund licenses. Okay. Yes, nice. Nice. Brand new task. We are looking at vehicle running expenses for the year. The cash book for the year shows prepayments for vehicle running expenses of 9,468. This includes the following payments for road fund licenses. Sorry, my eyes are getting tired. No wonder I'm struggling with this expression. I think I said it twice wrong. Can I try that expression again? The cash book for the year shows payments of 9,468. Makes all the difference. And it includes these two balances. And it's very important that we look at year ends with accruals and prepayments. Can you see just over my shoulder here, we have a year end of the 31st of March 2007, but we'll concentrate on the 31st of March. So our year end is the 31st of March. And if you take a look at the two periods that are covered by the road fund license, you can see that both of them drift into the new year. Yeah, that's a nice way of saying it. So the year ended the 31st of March is followed by the year started the 1st of April. The year ended the 31st of March is followed by the year started the 1st of April. And you can see that a big chunk of the 516 is related to the new accounting year. In fact, the whole of the 405 is related to the new accounting year. So what we want to do is we want to pick up these expenses and throw them forward into next year's P&L, and the way that we do this is with a technique known as accruals and prepayments. In this context, they're prepayments. So we've paid in advance, we've paid already for next year, especially the 405. I'm going to pick up the whole thing and chuck it forward. And I think I want to concentrate on the timing before I worry about any double entry issues. So I find quite a nice way of presenting the timing to you in this context is with, how shall I show you this? Maybe with a nice yellow blob. Yellow? Yellow. Nice yellow blob like that, and another nice yellow blob. And those two periods, they're not coterminous, so they're sort of shunted like that, slightly out on each other. But what I want to do is I want to show you where the year end falls. So the year end is the 31st of March, and the year end falls, I'm just imagining this being the period that's covered, and the year end falls right there, where 3/12 of this balance is related to this year, but 9/12 of this balance is related to next year. And with this one, it's actually much easier. The year end falls here, and all 12/12 are related to the new year. Just get rid of that thing there. There we go. Just say that again. All 12/12 of that need throwing forward into next year. So, I suppose it is a little bit naff doing it like that, but let's do it, shall we, as I've said it now. So 405 of 405 is thrown forward, and 9/12 of 516 is thrown forward. Here's my trusty iPhone. What am I doing here? 516 times 0.75 equals 387. I'm sure I can do that in my head, but I'll tell you what. Just ducking in and out of studios gets my head completely spinning. 792. So the amount that we've paid this year for next year is 792. The amount that we paid this year for next year is 792. And that paying this year for next year is called a prepayment. What a good phrase that is, prepayment. How am I doing for time? It's challenging, yeah. Well, it doesn't look like I'm going to get to go back to the other stuff. But that's really nice. I like that. That's proper bookkeeping, I would call it. 792, and in fact, actually, in order to score marks on this, we have to drop it into the entry box. 792, and then we're going to start to play with the balance of the 792 and the other information in a T account. Now, it's true widely of the bookkeeping papers, the level 2 bookkeeping papers, and also this bookkeeping paper, that the way that we enter data in a computer is the numbers, we type them in, and the labels in the T account we draw down from a drop-down menu. And you can see that there's a T account coming up here. So the numbers we would type into the number spaces, the numbers we would type into the number spaces in the examination, and the letters, should we say, the letters, the narrative, the descriptors, we choose from a selection. So we've got a brought down balance there, described as being a prepaid expenses reversal, and off we go. What do we do here? We read the question first. So what this is saying is, now that you've done the actual number bashing, can you put the number bashing into T accounts? Okay, let's see. Update the vehicle running expenses account. Show clearly the cash book figure, the year-end adjustment, the transfer to the statement of profit or loss. Goodness me, it even tells you what things to do, what 3 things to do. That's rather generous, isn't it? So the examiner says, do this, do this, do this, and then you're done. 2 marks each. Nice, thank you very much, Mr. Examiner. Now, the T account referencing that we're going to use is what's called folio referencing, which means that as the cash flows out the bank, we put reference to the vehicle running expenses in the bank T account and references to the bank T account in the vehicle running expenses account. So here we go, here's the money being spent at the bank. When the money is spent at the bank, we credit the bank, so the cash floods out the bank. Floods, that's an overstatement, flows out the bank, and the amount of money flowing out of the bank was given to us earlier. There it is. Not a particularly visible number, doesn't really jump out, does it? So that 9468 would have been credit to the bank, therefore it is debit to the relevant expenses T account. It's the usual drive on the left, crash on the right. So we debit expenses with a bank reference. And can you believe it, I've forgotten the number already, so I'm going to cheat. 9468 is the number up there and in my cheat notes. And then what happens? Then what happens is I'm going to take a balance to the profit or loss. Let's see the exact expression used up here. Choose one of these. Profit or loss account. So there we go. So the profit or loss. This is going to be credit to the expense T account and then debit to the P&L report to create the expense in the P&L report. But I don't want all of the expense here to go into the P&L. I don't want all of that 10 grand to go into the P&L because some of the 9 grand is actually related to next year. So I'm going to move that to prepaid expenses. And it is a prepaid expense, as in we have paid our supplier and they owe us. So they owe us. And we have a receivable, we're due to receive supply. So it's a debtor balance. So the prepaid expenses is a debtor balance on the balance sheet. So we debit the debtor and credit the expense account. And also the expense account, by putting in the 792, by the way, is the figure, makes this balancing figure smaller. So we don't charge everything to the P&L this year, which kind of reinforces the logic of the way this T account is working. It doesn't seem to be necessary to put in totals here, but let's do it anyway. So it's 10,308 and 10,308. Adding down on the left, of course, first. Adding down on the left first. And then finding a balancing figure. Whoops-a-daisy. Finding a balancing figure to fit in there. How are we doing for time? Almost run out of time. Which is pretty much perfect because we're done now, aren't we? So here we go. We've got 10,308 minus 792 equals 9516, and great, that agrees with my cheat notes. That makes me feel good. So we've got a 9516, 9516, and of course that balance of 9516 would have been bigger it would have been 10,308 if we hadn't have thrown some of the expenses onto the balance sheet. That's quite nice actually. I've got just a split second left. So this balance is going to pop up on what's called the balance sheet as an asset. Oh gosh, that would be nice. Ooh, asset. And this balance is going to pop up on the P&L report as an expense. They're in fact both expenses, but the 9516 is this year's expense and the 792 is next year's expense. Next year's expense that we've paid for already, so the supplier owes us, so we have a receivable, it's an asset. Great, that is it. That was unbelievably good timing. More luck than judgment. Is extremely difficult getting everything perfect in the studio, but that seems to have worked very well. I'm now going to go big me and summarise. Thank you very much for listening to me during that fairly intense session where we looked at debits and credits. It started really nasty with just a list of dry balances and trying to guess what the examiner was saying in those dry balances and getting them on the right side. And you heard me stumbling and stuttering over those decisions, and it is really, really tricky. You've just got to look at the language, practice these questions, and make sure you get used to the phrases that are used by the examiner in the way that they're used by the examiner. And then just hidden behind this green screen now is the tier counting exercise, which was far less painful. Just a little bit of looking at the timing of invoices and recognising a receivable in the context of a prepayment. Thank you very much for your time. I'm going to be back in 2 minutes' time when I'll be recording the next session. See you very soon.